While oil prices rose again, the fate of that Strait of Hormuz remaining in jeopardy, and as Iran continues to target oil-producing neighbours. The International Energy Agency says more stockpiles could be tapped if needed. To take a closer look at the prices, we can speak now to Chief Market Analyst at GTC, Jameel Ahmad. Jameel, firstly, let's look at the latest on that oil price reaction.
Yeah, I would say we're still seeing less volatility this week than what we saw last week, and I think that's seen as somewhat as a positive. We have to consider here that actually the US President Donald Trump did say overnight that when this situation is finished, the oil prices will, I will quote, drop like a rock. So it suggests that we're not going to have any further escalations, but of course things are volatile in the region, they're somewhat sensitive. What I would look at more here rather than the Strait of Hormuz is actually what's happening in some of the other aspects of the region when it comes to these attacks on certain oil fields, whether that actually changes the production outputs of such economies moving forward, because that could actually be a longer term issue for financial markets. But I would also look at another factor that I don't think has been spoken about enough, that it was also announced overnight that the US president would delay his long-awaited meeting with the president of China for up to 1 month based on how long this conflict persists. And that suggests that actually this might not wrap up within the next week or so. This might actually continue into the end of the current quarter. And I think that would be a concern for investors.
Meanwhile, Jameel, investors also waiting for central bank decisions this week. I mean, could we see moves there to offset a possible spike in inflation due to this ongoing uncertainty over the price of oil and that surge in oil prices? What do you think central banks might be thinking?
Well, I think you're right, Eve. This is certainly going to be weighing on the mind of these central bank decision makers this week, because we were expecting actually for the Federal Reserve, that's the US Central Bank, to put a real time frame for when they're going to resume cutting interest rates in 2026. But for as long as this situation persists and the likelihood of this inflation risk returning back to levels that were uncomfortable just a couple of years ago, I don't see interest rate cuts coming for the US Central Bank. I also think the same could be said for the Bank of England. Even though the Bank of England, there was some possibility they would cut interest rates over the coming months. I think so far what we're seeing is the market is trying to absorb what is uncertainty and a potential short-term disruption. But should this disruption actually turn into a supply issue and then lean into the inflation outlook, starting to delay the interest rate cut outlook, then I think we're going to start to see some real, I would say, downward pressure on 2026 global growth projections throughout the world economy. And that's when central bankers are going to have a real issue at their hand.
Jameel Ahmad, Chief Market Analyst at GTC, thanks very much indeed for your time and analysis.